Welcome to the ultimate showdown between two titans of value, gold versus Bitcoin. On one side, the ancient, immutable symbol of wealth forged over millennia. On the other, the digital, disruptive newcomer of the internet age. Both claim to be the ultimate store of value, a safe harbor in economic storms. But which one truly holds its worth better? Join us as we dissect this epic battle between physical and digital, between tradition and innovation, to uncover which asset deserves a place in your future. Gold, the timeless sovereign. For thousands of years, from the pharaohs of Egypt to the great gold rushes, this precious metal has been the universal emblem of wealth and power. It underpinned the global financial system for centuries. Its value stems from tangible properties, supreme scarcity, indestructibility, and resistance to corrosion. Gold is a physical asset that every culture, every empire has inherently recognized and desired. Its legacy is literally woven into human history, making it the original safe haven asset. Bitcoin, the digital revolution. Born from the ashes of the 2008 financial crisis, created by the enigmatic Satoshi Nakamoto, Bitcoin promised a radical new vision, a decentralized financial system. It operates without the need for banks or governments. Its value is not derived from physicality, but from a global network of computers and an unbreakable algorithmic code that guarantees absolute scarcity. Only 21 million Bitcoin will ever exist. It is a purely digital, borderless form of money. Physics versus code. Gold is scarce because it's physically hard and expensive to extract from the earth. Bitcoin is scarce because its protocol mathematically limits its supply. New gold supply increases by about 1.7% annually, while Bitcoin's issuance is perfectly predictable. Yet, gold has a key advantage: permanence. Almost all the gold ever mined still exists today. Bitcoin, however, can be lost forever if you lose your private keys. An ironic digital vulnerability for a supposed digital fortress. Tangibility. Gold's ultimate strength. You can hold gold in your hand, you can feel its weight, its density. In a true crisis, a war, a grid-down scenario, your gold coin remains a gold coin. It needs no electricity, no internet. Bitcoin, however, is entirely intangible. It requires power, digital connectivity, and technical knowledge to access and use. This tangibility provides a profound, primal sense of security that a string of code cannot replicate. In the palm of your hand, gold is unarguably real. Portability and divisibility. Bitcoin's clear edge. Try moving a ton of gold across a border. It's a logistical and security nightmare, involving armored trucks and customs. With Bitcoin, you can send $1 billion worth of value across the world in minutes with a click for a minimal fee. Bitcoin is also infinitely divisible, down to 100 million units called Satoshis, enabling microtransactions that are impossible with physical gold. For a globalized, digital world, Bitcoin's ease of transfer is a revolutionary advantage. Stability versus opportunity. Gold is the definition of stability. Its price moves in slow, predictable waves, making it a proven safe haven during market turmoil. Bitcoin is the wild frontier. Its price is notoriously volatile, capable of breathtaking rallies and devastating crashes within short periods. This volatility is a double-edged sword. It presents massive profit opportunities for traders, but it also represents extreme risk. Gold is for preserving wealth. Bitcoin is for speculating on its growth. Security. The bank vault versus the digital fortress. Gold security is physical. It requires vaults, guards, and guns. The threat is the classic bank heist. Bitcoin security is cryptographic. It's protected by complex mathematics. The threat is the invisible hacker, a phishing scam, or a failed exchange. While you can't hack a gold bar from a distance, you can't physically steal a Bitcoin from a well-secured wallet. Both have vulnerabilities, but they exist in completely different realms. The modern portfolio, why not both? Many financial experts now recommend a diversified approach. Gold remains the ultimate hedge against inflation and geopolitical uncertainty, a non-correlated asset. Bitcoin is seen as digital gold, a high-growth speculative hedge against traditional finance. Even legendary investors who were once skeptical now acknowledge that Bitcoin may have a role in a modern, balanced portfolio. It's not about choosing one over the other, but understanding the unique protection each offers. The environmental debate. Gold mining has a heavy environmental cost. Deforestation, mercury pollution, and massive energy use in extraction and refining. Bitcoin mining also consumes vast amounts of electricity, though it's increasingly powered by renewable sources and can utilize stranded energy. The carbon footprint of Bitcoin is a hotly debated topic, while the environmental damage of gold is often an accepted centuries old consequence. The question is, which cost are we more willing to bear? The future, a tale of two philosophies. Gold will likely remain the conservative choice, trusted by central banks and older generations who value its long proven history. Bitcoin is a bet on a decentralized future embraced by a younger, tech savvy generation that trusts code over central authorities. One represents the stability of the past, the other, the unpredictable promise of the future. This isn't just a financial decision, it's a philosophical one about where you believe the world is headed. So, who wins the battle for value? The answer isn't simple. Gold and Bitcoin serve different masters. If you seek stability, tangible security, and a proven hedge against chaos, gold is your unwavering champion. If you believe in technological disruption, accept high risk for high reward, and value borderless digital sovereignty, then Bitcoin is your asset. Perhaps the wisest choice isn't to pick a single winner, but to understand the unique strengths of both. In a world of uncertainty, diversification across both physical and digital realms might be the ultimate strategy.